Welcome back. Futures are rallying this morning. We are expecting a gain at the start of trading this Tuesday morning after the long Memorial Day holiday weekend. The Dow Industrial's up 235 right now, about 0.5%. The S&P's up 50, and the Nasdaq right now up 308 points. That is about 1%. This after the Dow Industrials hit another record high on Friday. Take a look. The Dow is up almost 300 on Friday in new record territory. 50,579 is where the Dow closed on Friday. The Nasdaq was up 50 points, and the S&P also above 7,473 right now. All the major indices at or near record territory. Oil prices are pulling back. That's certainly a positive for stocks this morning. The price of Brent is back below 100. It is down 4 2/3% right now at a level of 98.76. Crude oil down 4.5% at 92.25 as investors await any details on any progress on a Middle East deal. The U.S. overnight conducted defensive strikes on Iranian ships in the Strait of Hormuz yesterday. The U.S. saying that Iran was laying more mines in the strait. Mitch Rochelle, your thoughts on the price of oil? Could this be the beginning of oil tumbling lower for the rest of the year?
The world hopes so, Maria.
Yeah.
The fact of the matter is the strait being open is the key, and it's not just a supply and demand problem. For us, it's a global supply and demand problem, and the world relies on the strait for oil in many places. So that commodity is going to continue to have speculative buying if the strait isn't open, and that's the key to, preventing inflation from spiraling out of control around the world.
Yeah, well, look, as oil prices go lower, you have to believe that's empowering the consumer, and at some point it will show up. Joining me now is Pacer ETFs Distributors President Sean O'Hara. Sean, good to see you. Thank you so much for being here. What's your take on the latest developments? The U.S. conducting defensive strikes, the war obviously still on, and we're watching markets move at every turn. Your reaction?
Yeah, good morning, Maria. Thanks for having me. I think you're going to continue to see what we have been seeing, which is sort of like a ping pong ball going back and forth across the net. Every time we get a positive announcement that looks like we're going to make some kind of a deal or this conflict will come to a final resolution, oil prices settle down, the equity markets pull up, and then when we get resistance on the other side, we go back to the other side. So I think oil is what's driving the market now. It has been driving the market for the last couple of months during this conflict.
Sure, for sure. What signals are you watching right now? Because, of course, inflation is a major issue. We want to see the impact on the CPI and the PPI. What are your most important signals that you'd be watching for any shift in terms of investors?
Well, I think, we've talked about a couple of things already, oil being one of them. You talked about Kevin Marsh being appointed. I think he's got a tough job because, the bond market is sort of forecasting that we're not going to have lower rates, and I think that's a little bit of a headwind for the equity markets. And then you have this massive, CapEx spend by the hyperscalers that is still in doubt. They're going to spend the money, don't question that. They're going to spend $3 to $5 trillion over the next 3 to 4 years. The question for those mega cap stocks is, are they going to get a return on that? I think there's going to be a lot of people that benefit from that spend. Everything that goes inside of a data center, chips, hardware, software, networking equipment, cybersecurity, cooling systems, and things of that nature. A name like Johnson Controls, which is an autonomous building management company. I think they're going to be winners in this for sure today, and whether the hyperscalers make their money down the road still remains to be seen.
Yeah, it's a good point because interest rates this morning are coming back down. You've got the yield on the 10-year down sharply this morning after the new Federal Reserve Chairman Kevin Warsh was officially sworn in on Friday. The yield is now plummeting 6 basis points, sitting at a level of 4.49%. President Trump led the ceremony. There's Supreme Court Justice Clarence Thomas. The president said that he wants the Fed to be totally independent. The president also would like to see rate cuts, hoping that they will come down, quote unquote, very quickly. Investors, meanwhile, as you just mentioned, the futures market says investors are bracing for rate hikes in this period where inflation has moved higher. The Fed's preferred inflation gauge, the April PCE index this week, is out on Thursday, and we're expecting an increase of 0.5% or 3.8% year over year. What's your take on inflation right now, Sean?
Yeah, Maria, I think we're going to continue to see the pattern go forward, and that is that we're going to have higher inflation than anybody really wants, the consumer, the president, Fed chairman. And that'll be the battle is, can they come up with some kind of a construct where within this higher than their target inflation environment, they can start to pressure rates a little bit lower. I think that's the dance that Kevin Marsh has to sort of be a part of for now.
So, I mean, this market, even in the face of all of these uncertainties, have been on fire. It's the perfect time to go public, that's for sure. With this market up in the double digits since the end of March, you've got major tech IPOs on the horizon. SpaceX filed the paperwork to go public last week. We're waiting on OpenAI to file within a couple of days or weeks. Anthropic also not far behind. SpaceX is going to be the largest IPO in history with a valuation of $2 trillion. Tell me about the interest in these deals.
I think it's phenomenal. I think what's going to be interesting to see is whether or not they wind up in any of these major indexes. Because if they went into, say, the S&P 500 or the NASDAQ, they would automatically come in at like a 6% weight, which means there's automatic buying, which will support the IPO. The question is going to be who's going to get their weightings trimmed, and is there opportunities there for companies to see their stock prices go down as a result of forced selling as they reweight or reconstitute these broader indexes. I think that's going to be fascinating to watch.
Yeah, it's a good point. I know Pacer ETFs filed for a new ETF with the S&P and its partner 3AI. Tell us how you're going to use AI and models to identify the highest ranked stocks.
Yeah, well, 3AI is a company based in London. I was just there last week at their home office. They built this original data set for hedge funds for like an overlay for research, right? And so what 3AI does is they build an alpha score for individual stocks based on individual stocks and then business cycle on top of it. There's hundreds of factors that go into this. And so the way I think about this product is if you think about the S&P 500, Marie, if we put all 500 names on the table, you and I would say, well, here's 250 we just wouldn't buy with somebody else's money, right? But they're in the index. So the S&P 500, as it's broadly constructed, is a market cap weighted index with the biggest companies at the top. What 3AI is going to do for us is they're going to give us a score, again, based on individual stock and business cycle alpha. And then we're going to take the 100 highest ranking stocks out of the S&P 500, and those will be the 100 stocks that we own in this ETF. So rather than market cap weighting, I would say it's information or intelligence weighted, and it's very specific. And the idea is to produce alpha over time.
All right, we'll be watching that, Sean. Good to see you this morning. Thanks so much.
Thank you for having me.
Sean O'Hara. We'll be right back. Stay with us.